Welcome, everyone, to another episode of the HR and Payroll 2.0 podcast. I'm Pete Tiliakis, and as always, I'm joined by the legendary Julie Fernandez. Welcome, Julie.
Thanks, Pete. I'm so excited that we're going to be heading to the fintech side of the house here today for a conversation.
Yes.
Want to introduce our guest?
Yes. I'm very, very excited to invite a good friend of mine, a very brilliant gentleman in the world of fintech and digital money movement, crypto, blockchains, that sort of thing. The founder of Bitwage, Mr. Johnathan Chester. Welcome to the show, man.
Yeah. Thanks for having me.
Yes. You've been elusive as well. I've been trying to get you on for a while now, so I'm excited.
The mystique. It's the big reveal.
Have you seen those markets recently? I mean, it's wild on this time.
I know, and I got a lot of questions, man. There's been all kinds of rocky roads and excitement and angst and all kinds of things going on around just digital money movement and cryptocurrencies and stablecoins that I would love to dig into all that with you. But Julie, you want to do the honors?
I will, because, we never know what we're going to hear when we ask, how did you get into the field of fintech, payroll related in particular? And then why do you stay?
Yeah. Would love to do it. And it's actually kind of a combined story here of getting into both crypto and payroll at the same time, and fintech. So it started in 2013. I was working at Oracle in their open source division. I was in the sales group there. We were selling their Linux kernel and their virtualization technology. And while I was there, I put it upon myself to learn something new every day. And in doing that, I came across a TED Talk discussing the future of money. The future of money, it was this long story that challenged your concept of what is money? What is the point of money? Right? I talked about how in jails, Tide, laundry detergent, was money. Because everybody could use it, and it just became this fungible thing that everybody was using. It was also talking about how you could monetize your movement. The way that Nike had this program where you had shoes, and if you ran, you got points, and those points could actually buy more shoes. And it kind of evolved to this concept of okay, but what if we had a natively digital currency that was able to support global money movement without intermediaries being involved, which effectively creates a lot of efficiencies in cross-border mechanisms, but also allows people to own money digitally in the same way that you can own cash physically. And I'll dig into that a little bit more, what does that really mean? And so I talked about Bitcoin as this sort of revolutionary technology. And I became immediately obsessed. I ended up going down the rabbit hole, learning everything I could about this. And I came out this obsessed Bitcoin guy. So I'm going around at Oracle saying, you got to get into Bitcoin. At the time, Bitcoin was going crazy. It went from $100 to $1,000, and then it crashed down to $300, right? But at the time, there was another crazy Bitcoin guy who was mining some Bitcoin at Oracle, and we got connected because one of our mutual friends was like, hey, you got to meet this crazy Bitcoin guy. So we got connected. And at the time, it was very nascent, but there was a lot of different aspects of the financial ecosystem that people were building on, right? People were creating sort of neobanks with Bitcoin. People were creating FX exchanges on Bitcoin. They even had payment processors, the equivalent of a system that allowed you to process a credit card. And when I looked at the financial system in the financial loop, it's okay, well, at some point, you get the Bitcoin, you send it to the business, they have the Bitcoin. Well, what is the business going to do with that? We thought, well, a natural extension would be to actually close the loop and enable the business to pay employees with Bitcoin. And so we wanted to sort of set out and be the first people to address this problem. And that's how we got into the space. We basically got full conviction, left our jobs, and went full time trying to solve this problem of how do you enable businesses to pay employees in Bitcoin. And that's really where we started almost, a little over 10 years ago.
I'm laughing so hard now at how dangerous it is to tell yourself something, really personal, I want to learn something new every day.
Yeah.
Look what can happen.
Yeah.
That's crazy.
No, but that's the age we're living in, right? Learn, unlearn, relearn. I think it's phenomenal. It's interesting when you chase those passions and those things, you get rabbit holed and you're you find yourself something that you're endearing to. So I love that. Johnathan, one of the things that has become very apparent to me in my research over the last 5 years, really, more so than ever, going to Money 2020 the last few years, being around payroll as much as I am, is that there's so much inclusivity and so much access and so much ease of use with money now because of APIs, because of digital solutions like fintech and crypto and other things, that it's almost like everybody's rushing into it in a lot of ways. Cross-border money movement just by itself in the payroll space has now become sort of a standard offering, right, by the global payroll providers, because that's a painful process dealing with all that FX, and banks don't even sometimes want to deal with it. And so it's fascinating that not only commercially have we embedded finance now in everything, and it's kind of on demand, but we've also done that in our own personal lives, right? We're engaging with things. Our financial pictures are now made up on our phones of apps like Cash App and Gemini and Bitwage and all sorts of things that are Robinhood, right? Giving us this financial picture that before it was a bank and it was money. Now it's really become so different. And so, like, where is all that kind of converging? Like, where are we headed? Like, what's happening?
Yeah, I mean, I think that before we go to where we're headed, we should also understand like where we are, where we were in the past. Because in the United States, right, there's sort of all these new technologies that make it easier to move money.
Just the access to money, is really game changing.
Yeah, I mean, like if I go into my Wells Fargo app, right, and I want to send money from me to you, it's actually very hard in that app. But then there's like Zelle, and then I go into Zelle, and then that facilitates the transfer, right? And Zelle is actually acting as a layer on top of like different financial institutions, and there's a very complicated operation going on that like us as consumers don't notice, don't feel, and it's very easy to do within sort of one financial system. The problem that we still face today is the interaction between multiple different financial systems, right? So the primary way that people move money in the world today is across borders is through a system called correspondent banking. So correspondent banking effectively is a mechanism, and this still happens today in the United States too, but it's simplified. If I have a bank account at Citibank and you have a bank account at Bank of America, and I'm sending money from me to you, two transactions actually occur. Transaction moves from my account at Citi to Bank of America's account at Citibank. Then Bank of America registers this, takes the money out of Citi's account at Bank of America, and sends it to you. So two transactions have actually occurred. But when I'm sending money to a place like Argentina or Mexico or Brazil, these banks don't have direct relationships with each other.
Right.
And so a lot of intermediaries get involved. For instance, money can move from your local hometown bank to Citibank to maybe there's a bank in Brazil before it gets to a bank in Argentina, a major bank in Argentina, then to your, local credit union or whatever. And so not only do you have those intermediaries, you have multiple central banks involved, multiple regulators involved, and you have Forex providers. So there's all of this cost and loss of time as a result of having to move through so many intermediaries.
Yep.
So when you move money into, for instance, Brazil, you can easily lose 10% of the transaction. And it could take 5+ days for the money to get there. So it's not like a Venmo transaction that's occurring. And actually, I have a friend who worked at a Fortune 500 company in the financial services space. He was in their treasury group. He was moving money from Europe to Nigeria in the form of like $100 million. And when he sent the money, after 3 business days, the money didn't get there. And it turned out that the money got frozen in Canada.
Oh my goodness.
And so the reason why it got frozen in Canada is because the banks, their correspondent relationship went through a Canadian bank. And the problem is when you move money through this, the messaging protocol for it is called SWIFT. And there was only 140 characters available to describe the reason for the transaction. So when the Canadian regulators saw this, they said, well, we don't understand why there's $100 million going to Nigeria. Stop the money, right? So my friend had to go and call people to find the right person in the Canadian government to unlock the funds.
Yeah.
And then eventually the funds get unlocked. But time is money, right?
With that amount.
With that amount, exactly. So he ended up losing an additional 5 business days on top of that. So So that's kind of the world that we live in today. In the world that I live in, right, there's sort of two primary technologies that are driving global finance forward. One is Bitcoin, and the other is stablecoin. So um, and they're almost kind of yin and yang to some degree. They both have the value of being able to settle money cross borders without all these intermediaries involved.
Right.
And so
Right.
as a result, you only interact with local jurisdiction banks effectively. And if you don't want to hold Bitcoin, if you want to hold Bitcoin or stablecoin, you're talking about like instant money anywhere in the world in like, seconds with, very marginally low costs. But if you're talking about going from one fiat currency to another, dollars to Mexican peso, you can do that with these rails, and then you don't have to deal with the intermediaries in the cross border. And when you get into the local systems, then you have all these really brilliant tools like the Venmos and the PayPals of the world that make it instant or super low cost to move it there, right? And so you're sort of asking where are we going in the world. I think that the underpinnings of both how we move money and perhaps how we store value around the world will most likely initially start with stablecoins. And for those who don't know what a stablecoin is, it is actually a cryptocurrency that's backed 1-to-1 with a dollar.
Right.
And so like how we do it today is we work with a provider. We actually deposit dollars into their bank account, and they generate new stablecoins. And we can take those, send it anywhere in the world, and people will accept that as settled money. And they will actually turn that instantly into local currency at the best rates available, or they'll attach it to like credit cards and just spend it on credit cards or on virtual cards. So it's really just adapting the sort of new layer 2 technologies that make it so easy to move money in the United States or locally, and just making it global, right?
How does that differ from the the central bank digital currency, the CBDCs, that 130 some countries now are proliferating, that is tied to the fiat? Like, is that just a digital version of their dollar, basically?
It's an interesting point, the CBDCs, right? There's not such a huge proliferation of these things. So CBDC generally means that the central bank itself issued a digital currency.
Okay.
Right. Whereas most of the very prolific, where all the assets that are not on the CBDCs are actually generated by private institutions, regulated private institutions. Right.
Okay.
So that's kind of the main difference there. What it kind of means, though, is that there is a greater degree of privacy involved because all these transactions are highly. There's a high degree of transparency involved. So the value of the blockchain is you don't need to trust someone to know that you have your money, right? So how can I make that? How can I distill that down into an easy concept? So one of the big issues of having money digitally is that it's very easy to make copies of things digitally, right? So for instance, if I were to buy a ticket to a music venue, I could just like make a copy of that and send it to you, but then I could make a copy of it and sell it to someone else. And the only person who actually gets to see it is the first person to use the ticket, right? And so the way that we solved this before is that you actually had like a private institution in the middle that said, well, like you already sent that money, so you don't have it anymore. And what Bitcoin, it's the first technology to enable this to happen, is they created a mechanism such that you actually didn't need someone who effectively had control over your money to be able to enforce that you couldn't make a copy of it and send it to someone else. So it's digital scarcity. That's really what's happening here. Is there's digital scarcity. To enforce digital scarcity, it must be known to everybody what people have. Right? And so that's the whole transparency angle to this thing. Is that when I send money to you, the network updates and says, now everyone agrees that you have the money. You is a random address, so there's a privacy layer of like, who does that address belong to? But if you know who that address belongs to, then you actually understand a lot about the transactions that are occurring with that address.
Right. Sorry, go ahead.
So going back to the CBDC versus private institution, right? With there's a lot of fear with CBDCs that it would be too much information sort of known by the governments. That there's sort of an intrusion of privacy risk that the private institutions just generally create a sort of a line of defense as long as they're regulated and they're transparent about there is a dollar backing each one of the coins.
Right. Yeah. And that obviously gives people a lot more confidence than buying, say, a meme coin or something like this that maybe, may not be necessarily as safe, I guess. But, so all of those trends are really convergent with what we're seeing over kind of in the HR world, right? The money movement problem, right? Pandemic really shined a light on that, getting money to people quickly in places that the employers, in a lot of cases, didn't know where they were. But I think that all these challenges of the timing and all of that, like just think about, Julia, when we were talking about, say, 401k, right? When you change your 401k and you go to a new employer, the nightmare process that is of filling out forms and getting checks and waiting days and losing investments and losing time. Blockchain could solve that, right? Move, health, wealth, and retirement just come together now around that. But I think there's been something that I've said this, and I think I don't know that I coined it, but I think that one of the things that's interesting about payroll is blockchain has been a solution looking for a problem in payroll. Now, I think there's absolutely the money movement use case, but I don't know that it's necessarily going to do much else than move money around for them. But Johnathan, what are your thoughts on that? And obviously there's also another extension of that says there are employees who want the flexibility of having digital payments, and some of them want Bitcoin, some of them want whatever. That's an option, right? That's something that can be done now, and employers are starting to hear that from the ground up, right? Pull of talent telling them that. So there's two parts to this where I think there's benefits to everybody, but talk a little bit about blockchain. First of all, maybe give us a little blockchain 101. Blockchain for dummies, and then how do you feel like that could help payroll beyond maybe the money movement, if at all?
Sure. Yeah. So the general concept of blockchain, right, is you have multiple sort of databases and servers that are all agreeing to what everyone has or what everyone is doing, right? And the point of that process is you don't have a single entity with like a monopolistic power involved that's controlling it, potentially manipulating it, potentially extracting monopolistic profit out of it, right? And so the question is, under what environments do you need to have transparency of ownership? And there are different concepts that we've played around with, conceptually. One has been like a transparent resumes. So the idea that you can verify that someone's been paid by a particular company, and that acts as a source of truth. That like, okay, I'm on my resume. I said I worked for these guys. I can validate it.
Credentialing.
Yes.
Yes.
And actually, if you get paid, from a company on the blockchain, that is stronger proof than generating a pay slip, because the pay slip can now just be faked with AI. But you cannot fake the legitimacy of the transaction on the blockchain. So all of a sudden you can take that money movement and add a layer on top of it, which is the transparency of like, you have a living resume that moves with you and can be proven to be true. There are other interesting concepts like earned wage access. So in the United States, people move everything on these like sort of credit layers, so it can move pretty fast. But if you think about the cross-border component of it again, you can do earned wage access on like a daily basis with blockchain, and you couldn't do that before because the cost of sending that transaction and the speed of doing that transaction is basically the same as doing it domestically.
Right. That FX, yeah.
And so all of a sudden you now can add a layer of earned wage on top of sort of the global context of paying maybe W8 bends or some sort of EOR type solution, right? So those are maybe some of the key components and most important things that I've been thinking about.
Yeah.
There, if you get kind of more complex, there's these concepts called smart contracts. So again, we have this system where everyone agrees on what everyone's doing, right? And it's all transparent, and you don't need anyone involved. The smart contract takes that concept and says, well, what if we want like money to move as a result of an action being done?
Right.
In that context.
Yeah.
So basically, you could have a system where as you're doing work, a smart contract can pay, right? And so you, instead of needing a person to validate that the
Automate
work
it.
has been done, you have the smart contract validating that the work has been done, and then pays sort of on demand for that, right?
It's like
These are
an
just some
obvious gig work use case, right?
Yeah. Another kind of gig work use case could be a bonus. Could be a bonus use case too.
Yeah.
Right?
Yeah. Exactly.
So it could be not just gig work, but you know, these comp type things.
Johnathan, when you think about like how your customers are kind of engaging your solutions, like what is kind of the appetite for being paid in crypto by employees right now? Is it just a white collar techie kind of a thing, or are you seeing it with more maybe frontline or whatever kind of workers? Anything like that? Or
yeah, I mean, I would say that it's actually a surprising grab bag of the workforce. It's not just the techie workers. The techie workers might be more inclined to get a higher percentage of their salary, like Bitcoin or Ether.
Right.
But what we've generally seen when we do surveys internally with like larger enterprises, is that it comes around 15% of the workforce that's interested in this.
Wow.
And, you know, I mean, we did some of these surveys with some cities and states like back in 2021 when it was kind of like cool for these cities and states to start thinking about this. Where we see these things happening today, most of our biggest clients that are offering this are in the Web3 space, but they are like the largest companies in the Web3 space that are doing this. So, you know, they care about, you know, the security, they care about the HR risk, and surprisingly, not all of their employees are like diehard crypto people. They just thought, well, it'd be cool to get into a new industry, right? So you do have this sort of top-down, bought-in approach from the companies, but you also have the bottom-up acceptance from the employees.
Yeah, and it is surprising the people that I run into that are saying to me that they want or are investing in crypto. It's everybody. It's almost like all walks, like you said. It's not just the tech-oriented person.
I don't know. I feel like there's an experience element here that is probably going to be a rough hurdle for adoption, right? Because there is a comfort level that goes with having direct involvement with crypto, and exploring it on your own really takes, you know, an adventuresome mind at any age, and it probably comes natural, you know, the younger you are, I suppose, right? And others are doing it. But in order to be able to explore and, you know, I feel like the company also has to be able to translate it to something that is easily accessible and understood as pay. And that's a huge hurdle. Now, when you were talking about, you know, and then connecting it to a pay card or a credit card, and, you know, like as companies move to pay cards, does that give them more flexibility to, you know, to have the, you know, crypto behind the scenes and moving money in that fashion versus traditional methods of pay cards? In the end, if, you know, getting an employee to accept a pay card is a big enough hurdle, or direct deposit, right? In some places. So
only 20% have earned wage access, 20 to 30%.
Like how do you work the experience backwards to drive that adoption in addition to what is the natural pull of, you know, of folks that are kind of just curious and interested or excited about it?
Yeah, I mean, I don't think it's necessarily the organization's responsibility to convince people to use this. I think that it's really just solving a problem that people are currently experiencing, or, you know, appealing to a desire with a new kind of like perk or offering. So you know, maybe I like to think of it more like how do we make it super easy for like the HR person to offer this so that they can get the benefit without doing anything or taking on risk, right?
I think
that's how I think about it.
I think it's a lot like earned wage access, or even, Julie, I mean, maybe to be kind of funny here, but to say like even pet insurance, like it's not for everybody, but there are going to be people that, you know, so it's almost like it's on, you just come and take what you need, right? Or be a part of it. And if not, that's fine. It's not for you.
And, you know, I mean, if you look at the market cap of Bitcoin today, it's a $2 trillion market cap, right? I mean, it's one of the most valuable assets in the world. And, you know, with like Gen Z and millennials, like we're like a digitally native group. And for a lot of us, actually, cryptocurrency is easier than the stock market. It's easier than a 401k, right? So people are looking at this benefit as kind of like a 401k, but an easier version of it.
Yeah.
So for youth, from your side, you're like, oh, this is a very complicated thing. Like, how do we do it? From our side, it's like what you think is easy is actually like the slow, the archaic thing that we're not used to, right?
Yeah.
And so our job at our company is to bridge the gap of like, okay, for the HR and admins, like we figured out a way to sort of sync this into your, HR tooling as a post-tax deduction and just effectively automate the experience for you while giving your workers effectively like a 401k alternative that is easier for them to understand.
Right.
Yeah. I feel like a couple of the big items that you pointed out, about how you can move money faster or avoid expense. When I think about payroll, those two things are employer values, not employee values. Because, if you're
but they value getting it fast.
I'm getting paid the same amount, and it doesn't matter to me how much it costs you to move stuff around, right? And I'm getting paid the same day or at the same time if we take out earned wage access type scenarios, right? So I feel like there's got to be a little bit of a burden on the employer because they have those additional values that that they should be trying to get out of something like this, in addition to just appealing to folks that want it.
Julia, even I've written about this before. I think I don't know if I wrote an article, but I know I have talked about this a little bit years ago. Is just the health, wealth, and retirement connection of the blockchain and money movement. I think there's a lot of like the 401k scenario and others. But Johnathan, maybe you could just help us. Like, why does I think I know, but I want you to explain to our audience. Like, why does Bitcoin differentiate from? I know it's the earliest. I know it's one of the most well known. But why does it differ? And what is the risk for an employer getting involved in trying to do this, maybe going at this on their own?
Sure. Yeah. So a lot of people can make the case that a stablecoin, which is a dollar-backed cryptocurrency, brings all of the value of the cost and the speed and the transparency and the deliverability. So why even care about Bitcoin at that point?
Yeah.
Right. So I think that there is a key difference around who controls the monetary supply and the trust related to that. So the big difference between Bitcoin and like a stable coin or just like general dollars is not only do you control the money like you control cash, but the amount of money that will ever be printed is defined at 21 million coins. So it is a deflationary currency in general.
Yes.
Whereas the dollar actually has targets for inflation. It's an inflationary currency. It tries to be inflationary. And so, when you get paid in dollars, your goal is to spend those dollars, to invest them or to pay for things. But if you get paid in Bitcoin, it's a lot better of an asset for saving, right? Because of its deflationary nature. But it has the kind of liquidity that you would need to directly spend it. It's connected to debit cards. It's connected to Venmo. It's connected to all these different things that allow you to move it instantly anywhere in the world. And in addition to using it at the base layer, but you don't have sort of a political influence on it. And in some ways, you can say, well, the U.S. government has actually been a pretty good manager of the dollar. I mean, that can be up for debate, but generally, most people agree that other currencies have not been managed as well as the dollar, right?
Yeah.
But you can imagine that maybe there is a scenario where someone could come into the power and that management fails, right? And one of the kind of the bets that people have, well, first of all, you just want to hedge against that. But one of the bets that people have in the space is if that were to happen and the dollar were sort of to lose its status as a global store of value, like what would replace that? Who wants the Chinese yuan that's heavily manipulated? Euro, like I feel like every 5 years you wonder if the euro is still going to be there. I guess you could go to pound. They're not really quite the strong, country that they were before. And so when you just look at that, you almost think that people would then make the decision, let's not, bet on a particular government's currency. Let's bet on an apolitical currency. Let's move our standard to that. And so
the Switzerland of currency.
The Switzerland of currency. That's kind of what we're getting at with Bitcoin.
Yeah. Like gold, like gold versus cash, right? And in older people terms.
And interestingly, Julie, if you look at gold's gone crazy, right? But if you look at gold and Bitcoin, they're similar-ish, right? In terms of
it's the finiteness, I think.
Yeah, I mean, look, the BRIC nations are racing off of the dollar. I've watched a lot of conversations from experts on I think they call it the devaluation or something, demonetization of the dollar. The fact that they are shifting to things like Bitcoin and other solutions. So it's really, really fascinating. But what is the risk there? I think you might have talked a little bit of that. Like, if I try to go do this by myself as an employer, like, what am I really getting myself into in trying to move any of these coins? You know?
Yeah. Well, I guess you mean instead of using a provider like Bitwage,
without getting help. If I just try to go wallet to wallet myself, what's the? There's a lot of volatility. It seems like there's a lot of maybe even some wage and hour issues with that. I mean, because of that volatility.
I mean, there's a lot of considerations. I think that the first consideration is just like, what is the value of that coin itself, right? So you have to deal with like, what exchange rate are you valuing it at, and what, does the person agree to that exchange rate? And there's all sorts of like cost basis stuff going on there.
Yeah, the fees
that's complicated. And then when you think about beyond like the one-to-one, but like the one-to-many, right? So all of a sudden, if you're paying out to like 50, 100, 150, 1,000 people, you have 1,000 wallets that you have to like be able to like ingest and pay out to and manage, because those wallets can change over time. And any mistake that you do sending your Bitcoin out to a wrong wallet, with dollars, it's like, it's painful, but you can get the money back. With Bitcoin, you can't. So you would have just like lost that. So there's sort of that losing component. There's the cost basis component. And then there's just generally like the security and the communication of all of it. And then finally, it's like, okay, now that we've figured all that out, how does it actually like plug into the payroll system, right? If you're pricing something in Bitcoin, you run into like minimum wage risk, right? Because if you price like, oh, you're going to get paid X amount of Bitcoin, over this period, then if the price of Bitcoin goes below minimum wage, then you've broken minimum wage law, right?
Right.
So there's all sorts of different and then when we talk about cost basis, it doesn't just matter between like the liability between the worker and the company. It also matters regarding taxes, right? Like how much do you withhold? As well.
Yeah.
Right. So when you come in with a system, it basically solves all of these problems. Like with Bitwage, we automate everything for you. The company, it's all priced in dollars. So you come in, you have a payroll priced in dollars. It's synced into your payroll or HRIS system, so that we're only dealing with like net paycheck amounts. We actually have controls on like what currencies you want to offer, how much of a percentage that they can have. So you can also limit like, oh, we only want to let you have 10% of your net pay in crypto, right?
So Johnathan, one of the first questions I had when I was thinking about our conversation today is should we be looking at this as just the vehicle that you're funding payroll with, right? Or are we really talking about calculations and earnings and deductions and tax filings and, like the whole kind of payroll, post-payroll processing and activities that are going on. And maybe are some people start somewhere or are at one level, like all they want to do is just pay. And it's like, well, instead of paying through the bank and checks, like, why can't I just pay by uploading stuff into cryptos? Is it just a funding vehicle, or are folks really going further downstream and doing payroll processing natively?
Yeah. I would say that the primary use case today is going to be, we look at payroll today in fiat currency terms. So everything is still being done around that. The engine that we have mixes and matches this. So let's say the payroll is supposed to be $5,000. You have a $5,000 payroll. The person who's getting paid chooses, I want half of that in Bitcoin, half of that in dollars. The person who's paying says, I want to fund that with Bitcoin or I want to fund that with dollars, right? But the actual payroll processing, regardless of it's Bitcoin and Bitcoin out, is actually still in this dollar environment, right? And that's kind of the beauty of what this is, because like the actual value here is company is saving time and money. They're holding on to their money longer before they have to process. Worker is either one, getting access to an asset that they want and they believe in, or two, if they're around the world, they are also saving money. They're getting their money faster, and they have sort of like a global account that they can use to spend. And one last benefit is that, you know, a lot of like Latin America is like dollarized. Even if they don't have dollars, a lot of them save their money in dollars. And this is like the easiest and best way for them to save their money in dollars.
Yes. Yeah. Open banking is massive down there. I'm an investor in Nubank, and I've seen it really just explode in terms of the trust for banks and that sort of thing. But Julie, think about this, right? Like, I think that one of the things that is a problem right now that digital money movement is helping with is the fact that payroll was just like HR, just like the workplace, was all built around a manufacturing world and a bank file and bank funding cycle, right? But payroll is now so much more kinetic, always on, and connected to where money can move instantly. I think we get to a point where, and I've been saying this for probably 8 years, pay cycles will die. And if we get to where, I think if, like, for example, one of the segues I want to do, Johnathan, is talk about kind of the regulation that's coming around this. Because I think we've been slow, but I also don't want to see us throw a wet blanket. But I also do know there's some movements there's hope, I think, in our government, but also in other governments that are ahead of us for a mandate on digital payments within the government and within funding taxes and all of that. I think if we could get to that, where the employers had to move money digitally, and we had everybody's using the right always on, continuous calculation, earned wage access enabled, crypto or any other rails or whatever we need to move money digitally. If all of that was in place, I think the very long-term future is that payroll is just happening at the point of people working, so that they're working, they're submitting their time, pay's running, it's in their bank instantly. I think that's where things could go. I mean, is that crazy?
No, I think it's absolutely possible, especially with the advent of these kinds of technologies.
Yeah.
I think that this would, ultimately start in a stablecoin world before it could move to a Bitcoin world. Because again, in stablecoin world, we're talking about dollars. In some places, they actually call them digital dollars. They don't even call them stablecoins because they literally equate them to dollars, right? And we have Scott Bessent, right, which is the U.S. Treasury Secretary. He's saying that there's going to be $4 trillion of assets in the stablecoin market in less than in 3 years, right?
Wow.
And so when we think about how do we have this evolution of, okay, well, if I have my money, I don't want to do earned wage access because I'm making, yield on this. This is like a treasury finance person's decision. Well, with the stablecoin, you can actually have that stablecoin earning that yield. And then at the moment of pay, it instantly pays out through this whole mechanism. So you could withdraw it instantly and pay it out instantly. So there's no downtime, and it can be fully automated, this experience of just having, full float access, full yield bearing access on your money up to the point that you need to pay, but you can still pay as instantly as you want to do.
I know we're going to get into some of the pending legislations and just some of the big topic issues, but isn't yield one of them? Who can earn yield and who can't earn yield, in these scenarios and at what point in time? And I think I recall looking at some things that talked about legislation that would start to set some ground rules in that space.
Are we talking about the Genius Act right now, or are we talking about?
Yes. That was last week, right?
Yeah. So the Senate recently passed the Genius Act. So it has to go through the House right now. But this is like the flagship stablecoin bill. And it's meant to put trust into the process for minting and issuing stablecoins. So like right now, there are two main vendors and there is some regulation involved, but there isn't like an actual framework for how they have to do things. This is the framework. This is how you get to like the next level of trust and viability of these things. So it is incoming.
We're a little late. We
are. We're very late. But what it means though is there'll be more trust into how these coins are issued and how the money is managed behind the scenes. Because a lot of the regulation is like, okay, you gave us you gave that firm $1 and they gave you a coin, but what did they do with that dollar? And it limits the scope to like what they can do with it, which is basically like short-term treasury bills and money market funds and maybe a couple other kinds of low risk things. And so, it now goes beyond just the word of the organization, but actually, the government and the auditors, validating the word against the process, against the regulation, right? So I think that this is extremely important. I mean, you can see, I don't know how much you guys have been following the Circle IPO, but it IPO'd this month, and I think it IPO'd at like $30.
Yeah.
And it's now $250.
Oh, wow.
It's mind blowing what's going on. And the reason why is because people around the world recognize that stablecoins are going to power our domestic and global payment infrastructures, because right now it's just so inefficient.
Yeah. Wow. It's impressive. It really is impressive how incredible this stuff has proliferated and how it is, just being adopted so quickly. Do you think that would you like to see the government do more or less of anything? Do you think, we don't want them over-regulating, but what do you think you'd like to see differently?
I mean, I actually really like the current administration's approach. I think that regulation is good when it's done right. There's sort of like three kinds of regulation, but the first positive thing about regulation is that it is not banning something, but regulating, right? And that's already a first very good validation for something. Then there's sort of the next point of like, is the regulation designed to hurt an industry? Is the regulation designed to help, or was the intention to help, but it was made poorly and so it hurts, right? And I think that, without doing, a deep analysis of the Genius Act, I think that the Genius Act is in the sort of best case scenario position here. It seems to have a really good framework. It's building a framework that's federal. So in like the payment world in the United States, there's actually this huge friction to get licensed, because you need a license in every state to like process certain kinds of transactions. They created a federal license. And actually, we're behind Europe, because in Europe, if you get one license, it passports to all the countries in Europe.
EU,
right? And so this is a very, very positive framework that's coming out there. And I think that what is good about creating these frameworks is that if there are future administrations that come in, it's going to be harder for them to sort of regulate through enforcement if the enforcement doesn't follow the regulation, which is what we saw a lot of in the Biden administration, actually. If you look up this thing called Operation Choke Point 2.0, it was sort of this like hidden thing where they were leveraging federal banking regulators to like put pressure on banks to shut down bank accounts within the crypto industry. And it was a hugely damaging effect that really kind of went behind the scenes that I've had to personally deal with. And to see the 180 change in this administration, I think is not only going to help it proliferate, but it's going to create good regulations that can be almost administration proof.
Yeah. Along that lines, I was in town in Vegas I was at the Cornerstone On Demand event or Cornerstone, and next door at the Venetian was the Bitcoin conference. The president, I think the vice president was there. I think there were a number of dignitaries. And I'm just curious, like, what did you go? And what did you take away from that if you did?
So I was planning to go, but then I ended up getting strep throat. And I couldn't. And there were some other really positive reasons why I didn't go, but I can't talk about those. But
no worries.
I had actually been going to a bunch of conferences. I was in Dubai, and 3 weeks earlier, I was in Toronto like a week before. Dubai was actually... Dubai was crazy. So Eric Trump was actually at Dubai and at Toronto, and I think he was also at Bitcoin in Vegas.
He actually came into the win when I was in there. I think they came in to have dinner. There was all these Secret Service came mobbing in, so they were all at the event for sure.
I mean, the thing is, when I was in Dubai, the event was so crazy that like there were like monster side events. You could actually just not go to the main event at all, and still run into like thousands of people who were going to the side events at these conferences. It was really wild.
But what are you hearing out there? What's the pulse? Like, what are you seeing? Anything notable? Like, just in terms of like the trends,
from the administration or from
in general out in the market. Like, what are you hearing and seeing in terms of trends and things that maybe are surprising or concerning or whatever? Just anything going on?
Yeah. Well, I mean, the industry is like going crazy right
It's booming.
now. I mean, it is booming. And the new administration, again, it's like a 180. It's a 180 turn. It was previous administration was actually hostile against the industry, and now it's like actively promoting it, right?
Yeah.
I actually was talking to one of my friends. He said he was in a meeting with one of the members of the current administration, and like the prince, the Saudi prince, and the administration member was actually pitching the Saudi prince on why Bitcoin was valuable, right?
Mm-hmm.
So we're talking about these sort of top-down promotion of the industry in the United States. I think that the United States is going to come out as the leader in the cryptocurrency markets.
Yeah.
And right now, when we think about
we kind of have to.
I'm very bullish on stablecoins. This is like the huge thing. There was that $1 billion acquisition of Bridge, the Circle IPO. This is one of the big things. And I think that this is actually going to enable like global dollar dominance to continue to proliferate because it'll make it even easier for people to get access to dollars.
Yes.
Right? This is part of like a broader group of this concept called real world assets on chain. Mm-hmm. So like dollar is kind of the first most popular one, but people are talking about putting like real estate on chain and putting securities on chain. And there's a lot of popularity right now growing in this side of the market.
Amazing. Yeah. I mean, it is fascinating, the night and day difference. And I think that to your point, I mean, if the folks out there go and read a little bit about what's happening with the US dollar in terms of reserves around the world and the BRIC nations, right? Brazil, Russia, India, China are racing off of the dollar. I think you almost can see that we have to sort of win this race, just like AI and probably quantum and everything else. But look, Johnathan, man, I say this to a lot of guests, man, but I could just keep going on with you. But I know you got to get somewhere, and this has been so educational and informative. But I want to ask you this, man, before we part. Like, what happens to money in the future? Are we holding dollar bills? Are we talking about bumping phones and putting money to each other? I mean, listen, the other day I told this story before. My daughter, I owed her $40. She needed to go to the mall with a friend, and she was done some chores for my wife. And my wife said, "Could you pay her?" I was like, "Yeah." I pulled out my wallet. My daughter said, "No, Dad, I'm Cash App only," or whatever it was. And I was like, "Oh." So I paid her, got her paid. But I was like, man, this is the world we're in. Like, even my son, he's like, "I don't want cash, Dad." He's like, "Can you at least send it to me through PayPal or Cash App or whatever?" It's hard to give people cash in that age group. You know what I mean? So you can see where things are going, but like, does money go away? And are we talking digital, stable coins, fiat, whatever in the future?
I mean, I think that the wallet is fast going away. I very rarely take out my wallet except for my ID, but even the ID could go away actually with blockchain. And that's another thing, right? But,
digital ID is already here. Digital ID is already here.
So you could just rely entirely on your phone, and maybe even the phone is transferring to your watch and you're just doing everything through your watch, right?
Yeah.
So I think that we're going to get to a point where needing to exchange things physically between each other is going to go away. And, not only is it like frictionless and easy to do that, I think it also almost stops sickness as well, right?
Yeah.
Like a lot of sickness is involved in just like trading things, trading money, trading cards, this kind of stuff, right? So not only are we going to be digital and people are going to money will be cheaper and easier to use, people are going to be less sick. And, this is kind of the way things are moving. With AI, with crypto, with all this stuff, it's all just, everything is moving digital.
Yeah, it is. It is a digital world, man. And we're living in it. So Johnathan, thank you so much, man. Will I see you at Money 2020 this year?
I hope so. All
right. Look for me there. I'll have to have you come on the podcast with The Source. They always do a bunch of shows there. So I'll get you, see if we can get you on. And where can folks get in touch with you, man? I'll share your links.
Yeah. So if you're interested to learn more about Bitwage, you can sign up. Bitwage.com. My Twitter is @JohnChest. And that's it. Yeah, that's how you can find me.
Yeah. Awesome, man. I appreciate you. Thank you very much. And thanks to everybody for sticking and staying with us. We will be back soon.